Ladies and gentlemen, good day and welcome to Q2 FY24 conference call of Sigachi Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and zero on your touchtone phone. And now hand the conference over to Mr. Amit Thakkar from Valorem Advisors. Thank you, and over to you, sir.
Good evening, everyone, and a very warm welcome to you all. My name is Amit Thakkar from Valorem Advisors. We represent the investor relations of Sigachi Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and the first half of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Amit Raj Sinha, Managing Director and Chief Executive Officer, Mr. O.S. Reddy, Chief Financial Officer. I will now hand it over to Mr. Amit for his opening remarks. Thank you, and over to you, sir.
Very good evening, everybody. It's a pleasure to welcome you to the earnings conference call for the second quarter and first half of the financial year 2024. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company, after which Mr. O.S. Reddy, our CFO, will brief you on the financial performance for the quarter under review. Sigachi was incorporated in the year 1989. Today, we are one of the leading manufacturers of microcrystalline cellulose in the world. Our company manufactures high-quality cellulose-based excipients, which predominantly find usage in the pharmaceutical, supplement, and the food industry. The company has created a niche in manufacturing highly innovative pre-formulated excipients and 60-plus widely used excipients of international quality standards apart from giving customized solutions. From our state-of-the-art R&D facility, we ensure continuous innovation to efficiently meet evolving customer demands. We have 2 manufacturing facilities in Gujarat and 2 in Telangana, from where we ensure supply chain reliability for our customers across the globe. Our total capacities for this facility are more than 13,800 tons per annum, which we are further enhancing by ongoing capex to approximately 21,000 metric tons per annum. We also have an API unit in Karnataka which has been acquired a few months back. The process of integration is on. We at Sigachi have a global sales and distribution network and exporting to more than 60 countries across Asia, Australia, American continent, Europe, and the Middle East. Now I request our CFO to give you a brief on the financial performance, after which I will give you an operational highlight for the quarter. Over to you, Mr. O.S. Reddy.
Thank you, sir. Good evening, everyone. Let me first brief you on the financial performance for the Q2 of the financial year 2024. The operating income for the quarter was around rupees 99 crores, representing an increase of about 20.2% year-on-year. EBITDA reported was rupees 21 crores,
increase of 3.63%, increasing from 7,051 tons to 7,307 metric tons in H1 FY24. Sales of the products increased to INR 166.4 crores from previous corresponding half year of 149.9 crores. Company is constantly striving to improve upon its R&D capabilities and cost-effective manufacturing processes, and thereby remain a manufacturer of choice with highest quality standards. Our focus is on high margin yielding product mix and cost-effective manufacturing processes. Effective management of inventory would result in increased EBITDA and profitability over the coming quarters. That's it from my side.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Good afternoon. Thank you for the opportunity. So my first question is, the employee costs have gone up on the standalone basis. Is it due to the O&M part of the job that we do, or is it for any other reasons?
Yeah, thank you, Mr. Rajesh. This is on account of it's a combination. O&M, it is increasing. O&M mainly on manpower-based services are being provided. That's why O&M is increasing. That is one of the factors. And also we have OTC and generics are there. Those also mostly manpower this thing is there because we don't have manufacturing facility. We are getting it manufacturing the our required medicines through the outsource. That is outsourced. And the next major element is manpower cost. Because of these things, it is increased. And in going forward, it may come down a little.
Yes, sir, compared to Q1 also, Q1 we were around 12.8 crores and Q2 is 14.73. So any particular thing why this has again gone up so much?
That is mainly one of these two factors are there. And
mainly these two. So you are saying, you are trying to say that this 14 crores per quarter is what a steady state employee cost going forward?
Yes, yes. Going forward in the fourth quarter on
I would just like to additionally add here, Mr. Rajesh Jain, that the newly acquired API facility, of course, comes in with a certain level of employee cost, and there we are still working on seeing what is the best product portfolio mix to have a stable ongoing revenue. So you will see that in terms of absolute numbers, there might be a slight increase beyond even 14.72 because the Q2 complete all the 3 months the acquired facility was not in our books. It has only come in later. So I would say that this on absolute terms would go up slightly, but overall I believe in percentage terms the sales would increase, and in percentage terms this will drop at a later quarter.
So, just for my idea, this API business is under a subsidiary, right?
That's right.
Yes, yes.
So I was asking for the standalone, sir, not for the consolidated.
Yes.
Consolidate, I can understand this new API business also would have added the the employee. No, actually, what I'm not able to understand now is I'm asking you whatever you said the converse of that. In the sense, the consolidate margins are better, improved, whereas standalone it is gone down. So does it mean that your API business the margins are better than the standalone?
No, so it's not that we only have API business as our subsidiary. We also have our subsidiary in Sigachi MENA in the Middle East and Sigachi US. Sigachi US has been doing fairly well because there are certain demands which have picked up and certain stocks which have been cleared out at our customers, and so more stocks have been in use. So I believe the prime reason for the consolidated figure to be better is on account of the subsidiaries doing well, and among the subsidiaries I would put it at Sigachi US.
So that is the main reason, not the API one.
API, of course, has a contribution, but I would say it is not really the main backbone.
Okay, fair enough. Sir, I think you had given us a target of around 60 crores during the current year.
Yes.
For in the API business. Now, I thought the difference between the consolidated and the standalone is only the API, where it was showing 20 crores. Is it possible to share us what is the quarter sales for the API business?
CFO, do you have a breakup?
Yes, sir. API business, only 1st August onwards, that is, has come into our subsidiary. API has become our subsidiary. And August and September, both put together around 7.5 crores is the top line is there. And not contributed much.
So are you confident of achieving 60 crores within this financial year?
We are working towards it, sir. Of course, there are certain integration issues, but we have given ourselves a stretch target of 60 crores, and we are fairly confident that we would be able to get it on track.
Okay. Sir, just harping on the standalone margins, the margins are down mainly due to this employee cost being higher. Is that correct understanding?
Yes, the major element is employee cost only.
Employee cost having a higher contribution.
Yes.
Okay. So second is regarding your capex. What is the status of one is MCC plant? Second is the CCS in regard. What is the status of the upper one?
In terms of our MCC plant expansion, we are on track. By the end of this Q3, we should commence our commissioning activities. So in the Q4, we will have sales which will be showing on the balance sheet. In terms of our CCS expansion, we are expecting to get the environmental clearance by December 2023. So it was expected in November, but I believe that there is a slight delay in the committee. So we are expecting that by December 2023, the environmental clearance for the site should be in hand for us. And thereafter, we will immediately commence the civil works for the site.
Okay. Okay, sir. Thank you very much and wish you all the best.
Thank you, Mr. Jain.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Rahil Shah from Crown Capital Partners. Please go ahead.
Hello, sir. Good afternoon. With regards to the second half, so how do you see it panning out? What kind of growth do you expect this year and next year, along with your EBITDA margins? Any outlook you'd like to share? What will lead to this? What will lead to a good growth? So if you can share some highlights on that, please.
Mr. Shah, I would say that a 25% increase in the top line should be a fair bet for our excipient business, excipient and the current running business. Over and above that, if I club in the API business, that is an additional one. In terms of margin, I believe we should be comfortable on the positive side of 20% EBITDA all throughout.
Rahul, may I request to unmute your line and go ahead with the question, please?
Hello. Yes, sorry. So do you have the same expectations for the next year as well, for FY25? How do you see the market? Any broader view?
So for FY25, I think it's still more than a quarter away. So giving out expectations at this moment, I think, would be a bit too early. Probably in the next earning calls, we should be able to give you a broad, the stretch budget of what we are looking at from our business.
Right. And in the previous question, I also asked what will drive the growth. So so how do you see this? Which particular segments or?
So broadly, the growth would be driven by our pharmaceutical vertical, wherein our new capacities will come into force. Over and above that, the API vertical, API division also should bring in a reasonable level of revenue. So that should also drive our growth and contribute towards our overall business in the pharmaceutical vertical. So it should all be pharma.
All pharma. Okay, got it. Okay, thanks, and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Ankur, individual investor. Please go ahead.
Good evening, everyone. My question is that we had a guidance about the revenue.
Not clear. Can you please speak through the handset?
Sure. So we have given a guidance about a revenue of 400 crores for this year. Are you still giving the same guidance?
Yes, Mr. Ankur. We continue to have that particular guidance.
So that would be an increase of about 40% revenue quarter on quarter. Is that correct, sir?
40% increase?
Yeah, because let's say in case the guidance is for 400 crores.
Yeah.
So for the next quarter, revenue should be somewhere about 140 crores, the top line.
I'm not sure.
This quarter, Mr. Ankur, this quarter we have crossed 100 crores. Next quarter, this our API turnover also will be higher, and then MCC also will do better because our expanded capacities will come into force in fourth quarter especially.
Yeah, that is what I was hesitating upon, since you said that earlier that third quarter will get the revenue from the business. But now in case you're guiding for fourth quarter and 400 crores was the top line minus 85 and 99. So we will have to cover about 210 crores in the next 2 quarters.
Yes.
So is that still achievable, sir?
Yeah, it is achievable. In this quarter itself, we have crossed 100 crores. We have reached 100 crores.
Yes.
Third quarter, additionally, we get API business. And in fourth quarter, additional capacities also will come into place. That's why that is an easily achievable, we hope.
One thing was, can you throw some light on the joint venture in MENA, Sigachi Arabia? What is that we want to achieve and what prospects do we have there?
Yes, that's a very good question, Ankur. I think you have picked up the right one. So the joint venture with our Saudi partner, SNP, Saudi National Projects and Investments, is a very ambitious project with a very ambitious and good partner of Saudi. They are very renowned and a big partner to have in Saudi, primarily on account of the kind of network, cloud, and connection they have in terms of getting the business from the Saudi government. Saudi, as we know, is very good in terms of pharmaceutical growth, primarily on account of good population. And because of certain system changes which have been taking place, having a local company in Saudi is entitled for more business than an import. So our prime objective is that we commence with a local entity there and gradually over a period of couple of years work on seeing how we can establish ourselves as a manufacturing setup in the Saudi region. Once we have a manufacturing setup and we are making a certain line of products, maybe certain excipients or any ready-to-use formulations, these will become the prime first, purchase option for every formulator in the Saudi region. And I think that should give us a very good advantage because the penetration at this moment there is very limited. With the JV being in place, I believe Saudi should come in as one of our substantial big regions for growth.
Thank you. So the line for the participant dropped. We move on to the next participant. Before that, anyone who wishes to ask a question, please press star and 1 to come in the question queue. Next follow-up question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Sir, I have two questions. The first one is regarding the nutrition segment, food and nutrition segment. Is there any positive response we have got? Any customer we could enroll? Anything, sir, on that?
So we have been having a positive response from certain set of customers in the African region, in the Middle East region, and in the Asia Pacific region, and also in the US region. So we are only working to see which way we can have better volumes at a fair margin. Right now the volumes are lower, but we are working to see how we can have regular consignments of this transaction happening across these regions. The transactions are intermittent, and our objective is to see how we can have a regular monthly transaction. I'm sure you would appreciate, Rajesh, that we have distributors across and even end customers across just about all the continents and the 60 countries that we export to. So adding a new portfolio of product is not really a challenge. However, getting the product approved from the end customer at their region, I think sometimes does take time. Sometimes it does happen that samples don't clear the way it's supposed to be as per what the customer wants, and then there is a second sample sent. So all that basically, I believe nutrition and food should come in as good growth over the next couple of months, and definitely in the next financial year.
Okay. So, sir, I was under the impression that you're targeting more the domestic customers. Particularly the pharma. We have a lot of pharma food and pharma companies in and around Hyderabad. So I was under the impression that you're targeting more of that.
No, we are not really targeting domestic customers, sir, in the food and nutrition. Of course, we have customers, but that's not really our focus. Our focus is to see how we can have bulk business across the continents from the distributors where we have relation already.
So this, as per you, would take another 6 months or so. Maybe from FY25, things would start showing some result in this segment.
It would become more reasonable. It would not really be small intermittent volumes. It would be a fair volume, and I think we'll be happy about it.
Okay. So having run so far, do you think the margins would be similar to the one that we have existing for the MCC business?
No, MCC business is a very niche product we have, sir. It would not be as per that, because in MCC there is a lot of value add. We have a variety of 60 different grades of pre-formulated excipients and basic excipients. So the kind of value add I do to my customer in excipients is far more than what I do in terms of food and nutrition. So I believe it will not be as much as what the MCC business commands.
Okay, understood.
But it is. I would say it is a supplementary product line to have, because there are customers in the food part who consume cellulose ingredient as a dietary fiber, and they also need nutritional ingredient for the label claims. There are label claims which go in as with added calcium, with added zinc. So for all these label claims, they take in food, they take in cellulose as a dietary fiber, as a non-calorific dietary fiber, and they also need to take in these. So it's a very complementary product for our distributors as well as the food end customers.
So if my understanding is correct, you would be using MCC in these products, right?
Of course. There are combinations where MCC goes in as an ingredient into these forward integrated formulas which go into food, which go into nutrition.
Sir, my second question is regarding CCS. As of now, any other companies manufacturing this product in India?
We have a company by the name of Gujarat Microvax manufacturing this product at Ahmedabad.
Okay. Sir, is it same as Accent Microcell Private Limited? Is it the same one?
No. Accent Microcell is another company, sir. Gujarat Microvax is a much bigger company, and they have a joint venture with the world number 2 in making excipients.
Okay. So that means you are saying that there are already manufacturers for this product also.
Of course, there is a manufacturer because there is a demand for this product. So it is but natural that there would be suppliers who would be making this product. What I speak is the Gujarat Microvax is one among the predominant leaders in this product for this product, and is a very old player. I believe they are as old as Sigachi.
No, what I meant to say is currently these two or three, whatever the number of companies making this product, they're able to meet the demand, or is this CCS is being imported from outside also?
Rajesh sir, this CCS has a huge import, and that is one of the reasons that CCS is part of the complex excipient which is approved under PLI.
Oh, okay.
So
that means
our substantial import to be stopped, and that is the reason that the PLI has been approved. In fact, Sigachi's PLI, as and when the environmental clearance goes through, we will be even eligible for the PLI under this product. We would have to apply and get it approved, but I'm sure we will have it approved.
No, the reason for asking is, as and when we commission, there should not be any challenge in ramping up the production. That was the question actually.
I don't see that it will be a challenge because India, of course, is a good market, but historically and even going forward, our focus will always be on the export markets because export markets, the realizations are better. So I'm very sure and confident that there will be no challenges in terms of marketing or selling the new product of Cross Carmelos, CCS.
It is good to hear that, sir. So lastly, it's regarding the API business. Now that you have already 2 months, more than 3 or 4 months since the acquisition. Now, whatever the estimates you had, or the potential for the company and other things, what you had planned or thought, do you feel all those things are possible to achieve, and the infra, whatever their staff, everybody is capable? Is it as per your whatever you had thought and bought this company? Is it as per your estimation?
So it is definitely as per our estimation because we did do a lot of due diligence, background review, site inspection, third-party checks. All that was done, so it's definitely there. We only need to work out to see how do we change the track. We have had the subsidiary, the company, doing its activities and operations independent of Sigachi. Now what it needs to do is it needs to switch over to the way Sigachi works. So that integration, of course, takes time. And the most important thing is to align as to how do we work out to see that we have whatever are the targeted product lines. We firm up the chemistry, and then we have it regulatory approved from European Directorate of Quality and Medicine, and of course the US FDA. So once that is there, it will be a very positive step in terms of bettering our margins and of course our markets.
Okay, sir. Last time you had clearly mentioned about the plan that you have for this company over a period of next year or two. What I was trying to find out is all those things you feel it is possible to achieve. There are no hiccups or something like that.
No, there are absolutely no hiccups. We have already planned for additional capex investment in the subsidiary for increasing the capacities. So all that is on track. We are not really commencing the capex right now because we would want to stabilize what is already there. And once things get stable and things move, then we will start putting in the capex for the added expansion. So, but it is very much on track the way it was envisaged when we kind of had the acquisition done.
So that means the capex, the capex to expand the capacity, but that is still not started for this plant.
No, it is not started. We expect it to start in another 3 months, sir.
Okay. So that means other than our MCC plant at the H, so other than that, are we starting at Hyderabad also, the modernization of the plant, or no, as of now?
So modernization of the plant is a very slow and ongoing process. It is, the facility remains the same, certain technologies which have changed, certain water recycling systems which have come in, all those things. So that all continues, sir. I mean, I would say that it is not really a start and a stop. It continues round the year. We keep changing the air handling units as per what the requirements of the FDA is, or whatever is the requirement of any specific outside third-party audit. So it's not that we're going to have a start and a stop for the Hyderabad modernization. But for a brownfield expansion like what we had for the subsidiary of API facility, there we would have had a start and a stop because it will be a completely separate production block.
Oh, okay. So that means for Hyderabad plant, we will take up maybe in the next calendar year. Maybe.
I believe it will continue. CFO, correct me if I'm wrong. I believe the expansion of the Hyderabad unit would continue on a regular basis because nothing will be stopped. Because the production has to continue, so it will not really be stopped. There are no new production blocks being added.
Yes. Okay. So that is a separate block, so it can be done without any interference with the current plant production.
Yeah, absolutely.
Sir, you had given us some 18 months target as and when you get the approval, environment approval for the CCS. Do you still stick to that 18 months?
Yes, very much. 18 months, the moment we have the environmental clearance in place, everything else in terms of design, the vendors, everybody is ready. We would start dishing out, purchase orders and advances for the suppliers so that things just get ahead. The civil vendors, everybody is on track.
Okay, sir. Just the last question. That we are expanding into so many segments. I know a few of them are complementary, but like MCC, CCS, then food and nutrition segment, and now API. So do you think the management has enough bandwidth to take care of all these things at the same time?
Yes. So because these are all related, the management bandwidth becomes very complementary. In the overall pharma ecosystem, the excipients and the APIs are complementary. No formulation can be made without the excipients. So an API, of course, is necessary. So it becomes complementary. Our customer base remains the same. Our pharma ecosystem of keeping a facility as per US FDA standards, having an audit, remains the same. Only thing which changes is the chemistry. So I don't really see that we need to have a stretch on the management bandwidth. I think it's a very comfortable related diversification, and there are a lot of industries who have, in fact, I would say most of the MCC manufacturers have an additional product of CCS. So I believe that there is no real stretch on the management bandwidth with these line of products.
Okay. So I'm still tempted to ask you one more question related to this. Now that you have a spear land at Kurnool, I hope you will not come out with some announcement for some project in that land.
So I very difficult to answer this, but one thing is there, sir, that we don't wait for a perfect situation for taking the first step. We look out for opportunities and jump into opportunities even if there is a bit of ambiguity, because when the ambiguity clears and when things are crystal clear, there will be big players who would have already been kilometers ahead of us. So the moment we see a trend, the moment we see an opportunity, the moment we see that there is something good, we should take the steps, because that is how, because it is always a combination of risk and rewards. If we play it safe, we will probably be last in the queue. If we take a bit of risk and we speed ahead, we'll probably be the first among all. So we just have to work out and see what is the most appropriate step to be taken in the interest of all of us.
Okay. Fair enough, sir. Thanks for answering all my questions and wish you all the best, sir.
Thank you, sir.
Yeah, thank you.
Thank you. A reminder to all the participants, you may press star and one to ask a question. Next question is from the line of Abhay Jain, individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for the great set of numbers. I only have one question. One question is regarding the capex of 7,000 MTPA. You said that in the previous call that 10% of the capex will kick in Q3 and 25% in Q4. So are we sticking to the same guidance?
So I believe that this 10% might not really come in. We are in the process of erection and commissioning. By the time the erection and commissioning gets complete, I think we would be at the fag end of Q3. So the commissioning and subsequent sales would then thereafter reflect in the Q4. So in the Q4, I believe a 25% of the capex would be the added capacity would be a fair figure to target at this moment.
Thank you so much for the clear answer, sir.
Thank you, Mr.
Yeah, thank you.
Thank you. A reminder to all the participants, you may press star and one to ask a question. Next question is from one of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, I just wanted to understand where do we see our business going in the next 3 to 5 years?
So, Mr. Madhur, if you are indicating in terms of geographies, customer base, product lines, or the industries?
In general, as well as in financial terms, as well as in general, like as you highlighted that we are focusing on pharma right now. So what other growth drivers will be for the financial metrics that we can achieve or we have targets for the next 3 to 5 years?
Okay. So 3 to 5 years, of course, the pharma vertical would continue to be our backbone of the growth. We would continue to invest further into capacities, into related product lines, into facilities to be able to, have an at least 25% top line growth over the next 3 to 5 years. All other complementary verticals like food and nutrition would have their fair share of growth. On the operation and management part, I believe we should see some good business in terms of certain joint ventures which we have signed with international parties over the last 1-2 months. So in summary, I would indicate that I'm looking at least a 25% growth year on year over the next 3 to 5 years.
Thank you, sir. And will we see our margins improving when we go to this related products and provide and become a bigger part of the value chain?
So I definitely do see my margins improving in the API space after we have the regulatory certifications and the audits done, because that should be a possibility and that should reflect on our total margins as well.
Okay, thank you, sir. That was very helpful. And so, just one bookkeeping question. Sir, our other current liabilities have increased to 115 crores. So, could you explain me why is that?
Madhur, may I request you to mute your line from your side, please?
Well, sir, you could maybe unmute and speak up on this, on the current liabilities.
Sir, the other current liabilities for the H1 have increased from 9.4 crores to 118 crores. So that's what I was asking about. Sir, page number 13 of our investor presentation.
Page number, can you please?
So page number 12 of our investor presentation, other current liabilities.
Yeah, Mr. Madhu. This one, anyway, that is already, there is an increase in non-current liabilities, as is mentioned, and borrowings are there. Borrowings 18, that is 10 to 18, 8 crores that is increased. And there is a lease liability is there. As per the accounting standard, we need to accumulate all the lease holdings for the entire lease period because that is one of the reasons. So that is a small change. And when we see it, there is a total other liabilities. There is a 94. Here it is given, the borrowings is the major factor. 39 to it is increased to 51. That is because the top line also it is increased, the working capital that is increased. That is the major reason. And also the trade payables. Okay, anyway, here there is a small change. Here on lower side only it is there. Earlier it was in FY23 it was 20.8 crores, now 16.5 crores. And the other current liabilities 94 to around 9.4 to 11.83 is there. That is the major reason. Yeah, Mr. Madhu. Hello.
So the line for the participant dropped. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to the management for closing comments.
Thank you all for participating in this earnings con call. I hope we answered your questions satisfactorily and at the same time offered insight into our business. If you have any further questions or want to know more about the company, please do get in touch with our investor relations managers at Valorum Advisors. Thank you. Stay safe, stay healthy, and enjoy the Indian team play at the World Cup. Thank you.
Thank you so much.
Thank you all. Thank you.
On behalf of Sigachi Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.